Walgreens Boots Alliance reported their first quarter of 2024 on January the 4th. Results were in line, but not all that impressive, though there were some notable green shoots of hope. Revenue was up 10% year over year in the quarter to $36.7 billion. Gross margins were lower to 18.4% as the so-called transitory inflation hit costs of goods sold. Operating loss was $259 million compared with last year's loss of $6 billion. You may recall the opioid claims that they were obligated to pay. Pre-tax loss was $358 million and the bottom line came in at negative $68 million. As of this report, Walgreens Boots Alliance has a market cap of just under $21 billion. A closer look at the segment revenue showed growth in all business lines. U.S. retail earned $29 billion, up 6.4%. Their international business reported $5.8 billion, improving 12.4%, and their U.S. healthcare unit was up 95% to just shy of $2 billion. Turning to the ratios that make sense, shares outstanding were lower by 600,000 shares. EPS for Walgreens, earnings per share, was a loss of 8 cents. Sales per share was up 10% to $42.50. Cash per share was just 91 cents, though improved by 6%. Book value came in at $32. PE isn't meaningful, but their full year 2024 guidance suggests a forward PE of 7.4. More on that later. Walgreens Boots isn't over-leveraged and has a debt ratio of just 0.08 and debt to equity at 0.27. Liquidity ratios do present some short-term concerns. The current ratio at 0.66, the quick ratio at 0.26, and the cash ratio at 0.03 are all in need of some attention. Perhaps this is where the company decided to slash the dividend to avoid a cash crunch. Return on assets and equity were both negative, as can be expected. Investing cash flow was $85 million, financing cash flow was $186 million, and free cash flow, while still positive at $846 million, was down 80% from the comparative quarter last year. Another indication why they might have needed to cut their dividend after 47 years of consecutive increases. They paid 48 cents in dividends, yielding 7.8%, but that is expected to decrease to 25 cents going forward, which will retain an extra $795 million. That being said, the forward dividend yields will still be attractive at 4%. Current enterprise value of Walgreens Boots Alliance is $27.5 billion, and some valuations based on that. Revenue is 0.19 times and 33 times free cash flow. The company provided guidance of between $3.20 and $3.50 in earnings per share for full year 2024, which gives the company a forward PE of 7.4. An interesting valuation, but can they achieve it? It will all depend on customers and the economy. Key takeaways from the earnings report on the pro side is that revenue did grow 10%. That is likely masked by higher prices for goods sold. Based on the guidance, the forward PE is an attractive number. The company is not over-leveraged and the dividend yield is still good. On the con side, the firm is not profitable and gross margins were lower. Free cash flow was much lower year over year as well. Short-term liquidity is looking tight and the dividend was cut by almost half. We are giving the stock a neutral rating. We have no exposure to this company. Like and subscribe.